If there's a question that never goes out of fashion in the world of investments, it's this. Is it worth investing in Bitcoin now? Since it emerged in 2009, Bitcoin has gone through cycles of explosive appreciation, dramatic drops, and moments of uncertainty that left many investors in doubt. But if there's one thing that history shows us, it's that Bitcoin always recovers and continues its upward trajectory in the long term. So, the quick answer to this question is, yes, it is still worth investing in Bitcoin. But to understand why, it is necessary to analyze some factors that make this cryptocurrency one of the best opportunities in the financial market. Hello Bitcoin crazy, Oliver here, and here we go for another Bitcoin video. Come with me. The first thing we need to consider is the growing adoption of Bitcoin. Unlike the early years, when it was seen as an obscure internet currency, today Bitcoin has already established itself as a global store of value. Big companies like Tesla, MicroStrategy, and even traditional banks are allocating part of their assets in Bitcoin. Institutional funds and billionaire investors began to see cryptocurrency as an inflation protection and an alternative to gold. This means that Bitcoin is no longer an experiment. It has already become a respected asset within the global financial system. Furthermore, the Bitcoin scarcity is a factor that continues to drive its value. Unlike traditional money, which can be printed without limit by central banks, Bitcoin has a maximum supply of 21 million units. This means that as demand increases and fewer Bitcoins become available on the market, the price tends to rise. And there is an important event that happens every 4 years and that reinforces this scarcity: the halving. This event halves the amount of Bitcoins that miners receive as a reward for validating transactions. Historically, whenever a halving happens, it drives the price of Bitcoin in the following months and years, as supply decreases while demand continues to grow. The next halving is scheduled for 2024, and many analysts believe this could take Bitcoin to new all-time highs. Another crucial point for those who are thinking about investing now is the growing regulatory support to Bitcoin. If before governments and financial institutions tried to ignore or even fight cryptocurrency, today the reality is different. Countries like El Salvador have already adopted Bitcoin as their official currency, large banks have started to offer BTC-based products to their customers, and the United States has approved Bitcoin ETFs, making it even easier for investors to access the asset. This all reinforces that Bitcoin is not a fad, but rather a financial asset that is here to stay. And if you still have doubts about Bitcoin's potential as an investment, just look at its performance over the years. Even with corrections and crashes along the way, those who held Bitcoin for 5 years or more never had a loss. That's because despite short-term volatility, Bitcoin's long-term trend has been always ascending. With each new cycle, cryptocurrency reaches higher levels, which reinforces the thesis that it continues to be one of the best investments for those with a long-term vision. If this content helped or interested you, leave a like. This helps me a lot and shows that you want more videos like this. Cost. Of course, like any investment, Bitcoin is not without risk. Its volatility may scare some investors, especially those who come in expecting quick gains. But the best way to minimize these risks is adopt smart investment strategies, like the recurring purchase, DCA, dollar cost averaging, which allows you to buy Bitcoin gradually over time, reducing the impact of volatility and ensuring a more balanced average entry price. If you haven't signed up yet, what are you waiting for? Press play, sign up and activate the bell, because those who don't sign up end up losing everything. Don't hesitate. Another important factor to consider is the infrastructure being built around Bitcoin. The Lightning Network, for example, is making transactions in Bitcoin fast and cheap, allowing it to be used as a means of payment more efficiently. Companies are creating innovative solutions to facilitate the use of Bitcoin in everyday life, and the growth of the ecosystem only reinforces its usefulness and adoption. If we look to the future, everything indicates that Bitcoin will continue to grow and appreciate. With governments printing money without control, Bitcoin stands out as a solid alternative to the traditional financial system. Its immutable code, its decentralization, and its security make it the most reliable asset to protect purchasing power over time. So, returning to the initial question, is it worth investing in Bitcoin now? If you believe in technology, digital scarcity, and Bitcoin's potential as a store of value, the answer is yes, definitely. The best strategy? Think about the long term. Diversify your investments and not get carried away by day-to-day volatility. Bitcoin has already proven its value countless times and, by all indications, it will continue to be one of the most promising investments of the next decade. The halving is one of the most important and anticipated events in the world of Bitcoin. It happens approximately every 4 years and has a direct impact on the supply of cryptocurrency, which has historically led to significant increases in its price. To understand why the halving is so relevant, we need to look at the structure of Bitcoin and what makes it so special compared to traditional currencies. Unlike fiat money, which can be printed without limits by central banks, Bitcoin is a scarce asset. Its total supply was scheduled to be only 21 million units, and this number can never be changed. This means that, unlike the dollar or the euro, Bitcoin does not suffer from runaway inflation caused by excessive money printing. This scarcity is one of the main reasons why it is called digital gold. Halving occurs in Bitcoin's code as part of its original programming, established by Satoshi Nakamoto, the creator of cryptocurrency. This event takes place every 210,000 blocks mined, or which is equivalent to approximately 4 years. During halving, the reward miners receive for validating transactions and adding new blocks to the blockchain is reduced by half. For example, when Bitcoin was created in 2009, miners received 50 BTC per block mined. In the first halving, which occurred in 2012, this reward dropped to 25 BTC. In the second, in 2016, was reduced to 12.5 BTC. In 2020, fell again to 6.25 BTC. And in the next halving, scheduled for 2024, this reward will be only 3,125 BTC per block. Now, why does this impact the price of Bitcoin so much? Simple: reduced supply and increased demand. Whenever a halving happens, the amount of new Bitcoins entering the market decreases drastically. This means that while demand continues to grow, whether from individual investors, large companies or institutional funds, supply becomes increasingly scarce. And, as we know the basic law of supply and demand, when something becomes rarer and more desired, its price tends to rise. If we look at previous halvings, we can see a clear pattern of appreciation. Halving the 2012, Bitcoin was trading for around $12 before the event and, in the following months, it rose to more than $1.000. Halving the 2016, the price before the halving was approximately $650 and, in the following cycle, it reached its first major high, reaching $20.000 in 2017. Halving the 2020, Bitcoin was around $8.000, and in the following months it soared to $69.000 in 2021, its highest price yet. What does this tell us? That historically the halving creates a scarcity effect that drives Bitcoin price to new records. Although the impact is not immediate, after all, the market needs time to absorb the new reduced supply. Halvings have always been followed by appreciation cycles. Another factor that makes halving so powerful is that it reinforces the security and decentralization of Bitcoin. As miners' rewards decline, only those who operate efficiently and sustainably remain in business, ensuring the network remains strong and secure. And the next halving, scheduled for April 2024, may be the most significant of all. We are seeing growing institutional interest, with banks, funds, and companies adopting Bitcoin in their portfolios. Bitcoin ETFs have been approved, making it easier for large investors to enter the market. All of this happens at the same time that the supply of new Bitcoins will be cut in half. This creates a perfect scenario for a new bull cycle. So, for those who wonder if is it still worth investing in Bitcoin, halving is one of the biggest arguments in favor. It ensures that Bitcoin continues to become increasingly scarce, reinforcing its role as a global store of value. And, if history repeats itself, the next halving could be the trigger for another big appreciation movement. If Bitcoin has already appreciated so much in previous cycles, imagine where it could reach in the coming years with growing adoption, reduced supply, and an increasingly fragile traditional financial system. Halving not only protects Bitcoin's scarcity, but also makes it one of the most predictable and reliable assets for those looking for a long-term store of value. And with the next event approaching, it could be one of the best opportunities for those who have not yet entered the market. And so that you are even more informed about Bitcoin, I will leave this video here. Oliver leaving.